Cisco Systems reported their first quarter 2024 earnings on November 15th, and despite a record quarter, the market wasn't happy. Shares were down almost 10% to $48.04, putting Cisco's market cap below $200 billion after the sell-off. Cisco reported that their full-year guidance would be $53.8 billion to $55 billion, below the consensus of $57.8 billion. But if we drill down more carefully into the financial statements, it seems that Cisco isn't as bad as the sell-off would indicate. Quarter one revenue was up 7.6% year over year to $14.7 billion, with gross margins at over 65%. Operating income was $4.3 billion, up 21% and comprising 29% of revenue. Pre-tax income was $4.4 billion, up nearly 28% year over year, or 30% of total revenue. The bottom line came in at $3.6 billion, up 36% from Q1 2023, or about 25% of total revenue. Revenue by geography saw the Americas up 14% to $9 billion. EMEA had no year-over-year change, reporting $3.7 billion, and APJC was down 3% to just shy of $2 billion. A breakdown of the group revenue shows that all segments were better, with networking, Cisco's mainstay, up 10% to $8.9 billion. Security up 4% to $1 billion. Their collaboration business increased by 3% to $1.1 billion. Observability, their smallest business line, grew by 21%, and services added 4% to $3.5 billion. Market value ratios also showed improvements across the board, though it should be noted that shares outstanding decreased by 29 million, boosting these ratios slightly. Earnings per share were 89 cents, up 37% year over year. Sales per share increased by 8.4% to $3.60. Cash per share was up over 32.6% to $2.35. Book value was up 13% to $11. We annualized the PE, and 13.5 is well below the 24.8 of the S&P 500 as a whole. PE growth came in at 0.36. The leverage ratios also showed improvement. Long-term debt was down over $1 billion from Q1 2023, improving the debt ratio to 0.07. Debt to equity improved to 0.15. Interest coverage at 38.5 was up 8%. These ratios, taken together, show that Cisco won't be facing any debt problems anytime soon. Liquidity ratios all indicate that Cisco has no short-term liquidity problems either. The current ratio at 1.47, the quick ratio at 1.05, and the cash ratio at 0.36 are still strong indicators of the company's health. Cisco's return on assets was up 28% to 14.7%. The company is underperforming with respect to assets and has more room for improvement. Despite the 12% increase in total equity year over year, return on equity at 32% was up 21%, indicating a strong quarterly performance. Cisco has an equity multiplier of just 2.18. The cash flow for this first quarter shows operating cash flow was $2.4 billion, down 40%. Cisco had a large tax bill of $1.8 billion impacting this number. Investing cash flows were positive to $952 million from the sale and maturity of securities. Financing outflows at $3.8 billion, down 30%, were due to increased share buybacks and repayment of debt. Cisco finished the quarter with free cash flow of $11.1 billion, up 26%. Cisco paid a dividend of 39 cents, yielding 3.2%, growing at 2%. Cisco's enterprise value sits at $193 billion, which is 13 times revenue and 17 times free cash flows. The company's market cap is 54 times net income.